In this lesson we are going to be talking about Fibonacci retracement tool and the measured moves which are used in Fibonacci as well. And this tool, this is one of the the most popular trading tools. A lot of people is using it, and obviously the reason why this is working is because everyone is watching this. I will show you the levels I am using, and how you can use them in the confluence in your trading. For me, at least, this is not something that which is a standalone strategy. Basically, I am the two ways how you are going to be using the Fib tool is the first one is your confluence when you're entering trade, and the second one will be for determining your targets. Okay, so in order to show you how is everything set up on my chart, you will find the Fibonacci retracement tool right here in this toolbar at the trading view. If you remember from the trading view video, I have this in my favorites, so if I'm when I'm clicking the star button, the Fib tool will appear right here. And also these are my settings for the Fib tool, and basically everything is in the normal. I can quickly if I'm gonna apply defaults, this is how it looks. I will just quickly show you how to set it up. Give me a second. And basically what you want to do here, or what I do at least, to do this as clean as possible, I just use the black color. You don't really need the background. And for the levels, I never really use the 0.236 and 0.382. I use all of these 0.05, 618, 786, and then I use for the extension I use the one 0.618, a bit 2 as a whole number, and you can also add the 2.272. Also the last value I'm using is 0.75. This is kind of a midpoint between the 618 and 786, and you will see that you will find a lot of trading opportunities in this sort of a midpoint. If you are aware of the ICT, he is calling this the optimal trade entry or whatever, and having this crazy talk about this, but at the end of the day this is nothing but the midpoint between these two levels. And my problem with the 618, even though this one is working the most of the time, it is obviously that a lot of people are having the orders there. So what is kind of reasonable the thing to do for price is always just dip a little bit lower to squeeze out these traders, or stop them out completely to collect some extra liquidity. So this is how my Fib tool is looking. It's nothing really too complicated, like I said. And if I will show you this GBP/USD on a 4-hour time frame example, there are two levels, or there are basically two situations how you can use this. And there is obviously the couple of trades you will find in this area. And let's say for this particular example, I am looking at this whole structure right here, and I'm looking to get into the long trade, because obviously price was in this big rally lower. And very simple thing you can do here is if you're going to draw a trend line from this parabolic move down, and you can see that we broke above it and constantly pushing higher. So this is giving you the idea that the market will actually seek for higher prices after this downtrend, which took like 2 weeks or something like this. And the first thing here is, let's say that you missed this whole move and you want to get into the trade. And the first really thing you can do here is, if you're gonna draw the Fib tool from the bottom to the top of this move right here, you can see, let me just extend this a little bit for you to see better. If you're gonna draw it from the absolute bottom to the top, you can see that price is reacting from this 0.5 level. And what will actually happen to you a lot of times, because you know, basically we have like 4 levels to work with. These 3 are obviously pretty much close together, but you never know if price will hit 0.5 or you know, this 705, 786. So this is, like I said, just for a confluence, and you will need to look for some microstructures. You know, you will have to go to lower time frames basically to, you know, determine some more precise entries instead of just, you know, blindly jumping in. But if I would just do the fib from the bottom, you know, from basically this demand zone, the start of this rally, you can see that we are at 618. So, you know, this is also a way how you can look at it. But what is kind of more interesting to me is the fact that the first thing, you know, there are basically 2 things which I would do here, and the first thing right here is that I would draw the Fibonacci to, I would use a fib from basically this high to this low if I would enter the trade, and I would be looking for my targets. And the first reasonable target you can use is the 1.618 extension, which, as you can see, price came into, you know, very quickly, and then, you know, started selling off. And once price is going lower, you know, this can be just the pullback, and you still, you know, can be looking for longs. Nothing really, you know, basically as long, you know, in this, and I will be talking about this in the market structure lessons, but basically in this case, as long we are above this low, okay, we are still in the, you know, in some sort of uptrend. So you still are looking to get into the long trade. And if I'm, you know, extend this once again, you can see that price is hitting your general, you know, 618 area after taking this low out. Okay, there is a liquidity resting, you know, this is our, you know, pretty obvious swing low which we rallied from. You know, you can also say this is the support. Below this low there is liquidity resting, and you can see, you know, market rejected this low and started rallying higher. So this is a pretty obvious level to get into the trade. And once again, what you can do, you will use this recent high to the recent low, and, you know, to determine your target basically. And, you know, in this case, this is very you can see how precise this is. Price, you know, let's say you are getting into the trade somewhere here, and in terms of your targets, obviously you can be much more conservative. You know, we have a supply zone right here, for example, so you can just take profit right at this level. But if I would be just using the fib extension, you can see that we hit the 1.618, we had a rejection, then price pushed higher once again, stopped at this 2.0 extension, and you know, finally sold off. In the second example, I want to show you is the silver on the H1, and you can see right here that basically we have this up candle which led to this sell-off. You know, we are breaking market structure right at this point. We are making lower low basically, and you want to be buyer, okay? You want to be seller in this general area, and you have your area of supply. And like I said, you know, you don't really need to use the Fibonacci tool because this is pretty obvious level. Okay, this up candle, you know, led to the sell-off. You are selling once price will reach into the level. But what you can actually do is, you know, take out this high to this low, and you can see that let me just place these on the right side. This will be much better, and you can see that price is hitting this midpoint between 618 and 786 very precisely before selling off. Obviously, you know, what can happen to you in this particular case is that you will enter at this candle, but you are still, you know, protected with your stop loss above the supply, or, you know, if you are more conservative, above the high. So this is not really a big deal that you will be in a drawdown for a minute. Once I will show you the patterns, you know, the price action patterns. This is the over and under setup right here as well. So you have next factor of confluence right here, and, you know, you this way you can be more precise and basically wait to this move and then just get into the trade right here. But you know, either way, you are using the Fibonacci tool with the confluence of the supply and demand trading, and you know, you are getting in a very nice short. Even if you know, let's say you would enter really here and your stop would be all the way up here, then your extension would be kind of somewhere here. Let me actually take a look at this thing right here. I'm sorry, this is, you know, the kind of other way from this high, basically from this low to this high. Okay, you can see that 1618 is here, then we have a 2, and eventually, you know, price actually went all the way down to the 2.618 before some, you know, correction, and then you know, one more leg down, and you know, basically I don't really know what happened here. But yeah, like I said, you can use this basically the other way to determine your targets. The 618, it was kind of ignored here, but then, you know, still what I do the most of the time, I am more conservative with this. I very rarely set my targets below, you know, to the, you know, the two extension. The 2.272 is sometimes hit, and then, you know, 2618 is sometimes hit as well. But with this trade, as you can see, I'm really use basically the worst case scenario here. What could happen? You know, you are still getting a 2.5 hour trade from this setup, so this is more than decent. And if you would be, you know, a little more aggressive, this is like 3.5 hour, and then, you know, this is 4.5. But even if you know, will be in a drawdown and you will get out basically at the first kind of trouble area, right here at this 618 and extensions is still 2.5 hour trade in matter of like what, like 24 hours, which is very decent. In the confluence, you know, we have some support here and some demand zone as well, but you know, you don't really have to care about this that much if you are using these Fibonacci levels. So the Litecoin right here, okay, once again you are buying into the demand zone right here. You can see this down candle, which, you know, led to this rally. We made a higher high. We broke out this previous swing high, so we are making a higher high. This is the valid demand zone. This is the thing you don't really want to see. You know, price is hanging around this level that much, but still valid trade. And you can see right here, you know, I use for my extension, I used this high to this low, and price basically rallied higher and stopped, you know, perfectly at the 1.618. So this is kind of the reason why you should be really conservative with this. This is kind of actually stopped a little bit below this. Okay, if you would really you know, place your take profit here, that he wouldn't probably get filled, and this would really hurt. But you know, this is and I will be talking about this as well, you know, in the behavior lessons, where I will be talking about taking profits and stuff. It's always kind of wise to put your take profit like 3-4 points below your, you know, actual technical target, because sometimes these things will happen. But overall, you can see that by using, you know, this basically this consolidation, this high to low, we are able to, you know, determine this extension pretty nicely. The next example, this is the crude oil. I want to show you here that, you know, these are applicable at any time frame. Okay, I use these on 5-minute time frames when I'm day trading for my targets. I use these on long term, you know, higher time frame targets. And you will always you can always expect some sort of reaction at these levels, and you know, obviously reason why this is happening, like I said before, people are watching these levels. Okay, there is like really no you know, no magic behind this, and you know, whatever you are thinking that you will hear some very reasonable, you know, some very crazy explanation about manipulation or anything like this. it's just because these levels generally are, you know, watched a lot. And this is kind of a nice example on a crude oil, because we have we have this pretty ugly, no, not ugly, but not the best liquidity gap here. We have a supply all the way up here, but price generally just never hit the level and stopped at this 705 instead. Okay, and I think that this is some sort of more of a trend line break here, okay, which you would be able to, you know, get your position in right here. Okay, you can see that we have a trend line which, you know, acted as support here, then it broke, and it's acting as resistance here. So, you know, this is more of a kind of like spike before the New York opened on this day, and then, you know, so this happened like 2 days ago, I think. So yeah, the crude oil, generally I wanted to show you just how you can use these at basically any time frames you like to trade. The next example, this is interesting as well. This is a trade, if you have been following me for some times. This is the NULS USDT. This is the cryptocurrency chart, for those of you who don't know. And what do we have here? I was, you know, talking about longing this at the end of the March, with my general target was, you know, this swing low right here. This is also, if I'm gonna put this is the $1 mark. Okay, I was actually, you know, targeting this $1 mark. Price spiked just few cents above and then, you know, sold off. But we have basically, what do we have? We have this resistance. Okay, you know, price is acting as resistance here, breaking it, and now acting as a support. Okay, also this is the supply. This is like the broken base, the supply demand flip. Basically, we have a supply here. You know, if and this is also a nice example. If you will just draw this as resistance, then you would be missing on these, you know, touches as well. But if you have the wider level, obviously your stop loss is wider as well. So, you know, you might get some lower risk to reward ratio, but, you know, you will have all these signals in your chart. And what I did here, you know, I took the extension once again. I used this, you know, high of this candle to the absolute low, basically, and let me just adjust this, and you can see how price, you know, basically stopped out at this 2 extension. And also you can see that once we hit, and this is kind of ugly here, but this is the 618, you know, that is this candle going through it, but you can see what happened here. Okay, this is the daily chart, so obviously if you would be at the lower time frames, you would see this selling going on once we had the 618 extension. And once again, this is just happening because there is a lot of orders resting here. Okay, and if I would go just one time frame lower, maybe I would be able to find some yeah, and we have a supply zone right here. You can see how price, you know, made this base, these 2 up candles before next leg lower, taking out this low. So we have also the area of supply, and this is generally what you want to find here at these extensions. You know, just not blindly following these, but, you know, trying to find some extra confluence with this as well. So this was the NULS BTC. The New Zealand dollar right here, this is interesting trade. I posted in the group as well, and we have a few things going on here. I was talking about this trade when price was all the way down here. You know, we broke this very long-term trend line. You know, you can see that this is kind of not perfect, but this will just do you know, do the cause. And I think I showed this chart in some previous videos as well. We on a daily have a demand zone right here, so next factor of confluence to go long. But if you are kind of thinking about determining the targets, there are 2 ways how you can do this. The first kind of step is, you know, taking basically this high to this low, and, you know, this is a little bit more you know, hoping approach, basically, you know, because your target will be pretty wide. You can see that we are at 618 right now. Okay, so the extensions obviously are much higher, and but still, okay, some people do it this way. Obviously in this case you are not using the extensions and you kind of want to continue with the trend, but in this case I think that, you know, we bottomed out on New Zealand dollar and we will actually continue higher for at least some period of time. But if there are traders who want to short this and they think that this is just the you know, the pullback before we will resume back to the downside, they will do something like this, and you can see that 0618 price came here and, you know, immediately sold off and, you know, made this big down candle. Right now, you know, price is pushing back higher, and this is obviously what I said, that I think that we bottomed out on the New Zealand dollar and we will actually continue higher, at least here in my opinion, but obviously I don't know that. So what I did in this case, what I thought it's a little bit smarter, is that I use these first of all, what you can do, okay, if I'm gonna do this low to this high, we have let me just draw this daily demand zone real quick. Okay, let me to show you. Okay, the next confluence level is, you know, right here, and if I'm gonna use a fib as well, you can see that we are, you know, kind of hovering around these 618, 705 and 786. You know, sometimes this will be extremely precise, for example with the oil, how this, you know, basically just hit and immediately rejected. The New Zealand dollar is a little bit more all over the place here, you know, price is just consolidating basically, making this trend line here on lower time frames before breaking up and continue higher. But you can still, you know, use this, and you still want to be in this general area. Obviously this is pretty wide, but let's say once again you would be a little bit, you know, unlucky, and you can see, because, you know, you could easily get baited here into the trade. As you can see, you know, people don't really talk about this that often. You know, all these people who are just making some educational videos about trading, they will just show you the perfect examples on the trades. But, you know, and even for me, I actually got into this trade later on. Okay, I got into this trade somewhere here because, you know, yeah, this is like in the morning. I was posting and opening this trade down at this level, sorry, in this general, you know, consolidation, because you have to think that this is 4-hour time frame, so this whole thing took out like 16 hours or whatever, and I wasn't paying too much attention right here, but, you know, easily what can happen and what could happen to me was that I would long this, okay, because as you can see, price hit the 618, hit the 705, and then, you know, closed above it. So this if I would see this in a real time, there is actually a pretty big chance that I would be in the trade already, and yeah, I would be in the drawdown for quite some time, you know, and my stop would have to be pretty wide. Okay, I would place my stop loss at these lows, or, you know, if I would be a little bit more aggressive right here, but I think generally this is not that big of a difference. But let me just move this real quick on the side, and if I'm gonna use the extension right now to the other side, you can see that I have my targets, you know, kind of determined. As I posted this trade, I actually, you know, used the volume of this, you know, I used the volume profile of this whole down move, and my targets were, let me actually check, I didn't check this in advance basically, so, and I will be making the separate video about this move on the New Zealand USD later on, and I just didn't want to. Okay, I just need to make something real quick. I will be right back. Okay, I'm sorry, I had to change my broker chart, because you know, if you were watching, you know, for you this was just a few seconds. For me this actually took a little bit longer, but I was showing you the FXCM chart, and I found out that the volumes on the FXCM chart are not the best, so I am using the Oanda actually for all of my charts. Anyway, if I'm gonna mark out the fixed range volume profile right here, you can see that the 618 is pretty much in the correlation. And let me just delete this. I will just quickly put my long entry. It was at this wick for this example. Okay, and okay, I have an extension right here, and you can see basically that the 618 is pretty much correlated with the point of control here. Okay, so if you don't know what the point of control is basically where the most volume was traded. This will be explained in the second module anyway, but if I'm just gonna draw this spike right here, then you have a general area right here. Then for the two extension, you have next very high volume node right here, and and there is a next high volume node right here as well. Okay, right here with this. So like I said, all these things should be correlated all together to give you more and more confidence. And as you can see, price left the level, and if I would put my target here, then I would be still getting over 2.5 hour trade. Okay, it would be a little bit pain in the ass because price would be going against you basically for 2 days, which for a lot of people is kind of hard thing to go through. This is kind of my least favorite thing in trading, when I'm swing trading and just prices consolidating. And what will happen a lot of times is that I will close the trade because I start to think it's going nowhere before it really takes off. So this things will happen to you for sure. But if you would be patient enough, then this would actually launch after this little bit more precise test of the trend line, and you can mark your targets from the absolute bottom, because before this obviously you have to think that your extension will be right here. It wouldn't be really that big of a change, but once this will make this absolute bottom, and this H4 candle will kind of give it off that this is really going higher, this big confirmation bar. So once you have it, then you will use your extension, and your first target is here, then your second target is here, and then eventually even this hit the 2.618. But you can see how at 1.618 this retraced a little bit before pushing higher, and yeah, we had small retrace here, but overall this was pretty strong. And like I said, I think this is going higher, so not really reason to short it. Just use these as your partial closes or just getting out of the position. And the last example I have here, I think it's the Neo USD USDT. And yeah, this is all the same thing. You can see right here, we have a demand zone all the way down here. Okay, this basically this level is used as a support, and if you are getting in a trade, let's say somewhere here, on the second test, we took a swing a little bit below this low. So this if there was some liquidity, it was taken, even though this is kind of not that significant. But overall, we are making a double bottom right at this level. And once we are kind of breaking above this small supply right here, this basically last up candle before the sell-off, or even this is the supply right here, which can be used if you are late into the trade. This can be used as buying right here. But as we are breaking kind of above this and we are coming to the retrace, this is a crypto chart once again, so don't really put too much emphasis on each candles here. Then you can still use this this extension from this high, okay, to this last low. And this is this hit. You can see, even though, let me actually go to 5-minute time frame for this one. This will be more interesting right here for sure. If I'm gonna go to the 5-minute time frame, you can see how these levels are used. Okay, we hit the 1618, price will retrace back. We hit again resistance again, smaller retrace, break above 2.0 extension, resistance once again. We are kind of pushing lower. I don't really use these. What is kind of worth to mention here, I don't really use these levels as, you know, the SR levels. I don't really believe that, you know, like if I would see that price is going lower from this 2 extension, I wouldn't really be placing my bids at the 618 and, you know, hoping that this will be used as support, even though it does right here. But you know, you can see that once we kind of figure out, once price kind of figure out what it wants to do, you know, with this kind of after price basically bottomed out here, made a new high at this level, retraced to this demand zone right here, then and started pushing higher, then you can see that this 2 extension was used once again for some small retrace, one more push higher, 2.272, and then, you know, price kind of died from here. So I just want you to take a look at this. Once again, the best thing you can do here is just, you know, put it all over your charts, try to find as many examples as you will, and, you know, you will start seeing how these levels are actually, you know, pretty pivotal on your in your trading. Okay, if I'm gonna just kind of all the way back in September, I just want to show you I just wanted to show you something. This happened in April. Anyway, yeah, if I'm just gonna go to the 15-minute time frame, because, you know, if you have time, obviously there are people who doesn't have a time. I know that a lot of people are working full time, and for a lot of people it's not really a viable option to watch 15-minute time frames. But, you know, if you have a time, then obviously you are using these as your general areas, and you are waiting for the confirmation on lower time frames, and you have kind of perfect over and under here. Okay, this is some sort of tree drive pattern. Then, you know, the next confluence is that we are breaking this trend line, so you can sell into this move, you know, or you can compound if you are already in trade. And, you know, you can actually end up, you can see that I will use the 618, but if I would be catching this on a 15-minute time frame, my stop would be somewhere here, and then I would be getting, you know, 4.5 hour trade instead of this 2.5 hour trade at H4. Okay, with very conservative target at the 618 extension. If I would held this, let's say, all the way down here, that this is much higher risk to reward ratio. So yeah guys, this was it for the Fibonacci levels, and I will see you in the next video.